Hello to all of you out there. Thank you for giving me the opportunity to present this helpful and important information. I am Jay the Realtor, and my job is to walk you in and walk you through the home buying and selling process. With that said, let's get it.
There are many different ways to stall or stop foreclosure in Texas. Some of the options include loan modification, filing for bankruptcy, selling your house, and forbearance agreements. Most of these options are aimed at allowing you to continue making modified payments toward your mortgage. Some are more focused on getting rid of the debt in total. Stopping the foreclosure options. 1. Personal loans from friends and family, mortgage and tax foreclosure. Before you jump right into borrowing money from friends, consider if there are other personal loan options you can turn to first. For many reasons, it might be better for you to borrow from a bank or financial institution rather than from an individual you know. Make sure you also understand the risks of borrowing money from friends and family, and that you are willing to face them. This type of loan will have all the same risks as other debts. Here is a web link for loan agreements with family and friends, https://www.debt.org/credit/loans/friends/family/2. Loan modification and forbearance agreement, mortgage foreclosure only. While you can't wait until the very last minute with this option, you might be able to delay a foreclosure by applying for a loan modification, or another foreclosure avoidance option, because the bank could be restricted from dual tracking. Dual tracking is when the bank proceeds with the foreclosure while a loss mitigation application is pending. Ultimately, if your modification application is approved, the foreclosure will be permanently stopped so long as you keep up with the modified payments. Is there something recently happened that is stopping you from making your payments? Did you lose your job, get sick, go through a divorce, or do something else that would impact your financial situation? Your lender may be willing to enter into a forbearance agreement. This agreement typically means the lender is giving you permission to make lower payments, or even no payments, for a period of time. In most cases, if you are able to prove that the reason you are struggling to make payments is not a long-term hindrance, your lender may be willing to give you a short period of time as a sort of grace period. 3. Home rental, mortgage and tax foreclosure. The homeowner facing a potential foreclosure might consider home sharing to earn the extra income to make the mortgage payments. In fact, renting a room in your house may be the most effective way for the owner to avoid foreclosure. However, by becoming a landlord, the homeowner is implicitly agreeing to take on certain responsibilities. The homeowner is required to report rental income to the Internal Revenue Service, but can also deduct certain rental expenses. 4. Cash offer, mortgage and tax foreclosure. I know it's a difficult thing to think about, but sometimes, the best option is to sell your home. If you would make money, or even break even, if you sell your house, it's a really good option to consider. Perhaps you could even purchase a house that is more in your price range, or even rent a house while you get back on top of your finances. Either way, selling your home allows you to not have to go through foreclosure, something that can drastically change your credit and reputation. Cash offer purchase typically requires a homeowner to have acquired a minimum level of equity in the home value and mortgage payments. If the homeowner has been paying your mortgage for at least 5 years, you may have achieved enough equity to sell to a cash buyer. The longer you, the homeowner, have been paying the mortgage, the more cash payout in your pocket you can expect after the sale is completed. 5. Short sale, mortgage only. While short sales are usually a better option for homeowners than foreclosure, they present real estate professionals with several challenges, including understanding and complying with any lender-specific short sale terms, negotiating with multiple lenders, in situations where the homeowner has several mortgages. The fact that the mortgage lender must approve of any offer the homeowner had decided to accept can cause lengthy processing delays and turn off buyers. Remember, the lender has the power to approve or deny the short sale. Unfortunately, while they may approve the buyer's offer within a few weeks, some lenders may take several months to respond. Owners who sell their homes in short sales will also have more mortgage-friendly credit reports than homeowners who were foreclosed on. In fact, they even qualify to apply for future mortgages, should their financial situation improve. 6. Realtor Listing, mortgage and tax foreclosure. This process begins with discussing the timeline and options for selling a home on the MLS, multiple listing service. This will provide the greatest exposure to home buyers and provide the highest offer price to the property owner. Remember, not all pre-foreclosure home sales are short sales, although all short sales are pre-foreclosure sales. If your mortgage isn't upside down yet, a pre-foreclosure sale is similar to a regular home sale, with the difference that your timeline is shorter. So if the homeowner is choosing to list a property, the sooner the better. A realtor will need 45 days minimum because of contract negotiations, inspections, lending approval, title researching, and other factors. Much of the proceeds of the sale will go to cover the unpaid balance of the mortgage, as well as lender penalties, taxes, and unpaid mortgage interest. The is that homeowners who sell their homes while they're still in pre-foreclosure can evade the negative repercussions of having a foreclosure listed on their credit score. 7. Seller financing or subject to mortgage and tax foreclosure. If you own title to the property, you may choose owner financing, also known as seller financing. Lets buyers pay for a new home without relying on a traditional mortgage. Instead, the homeowner, seller, finances the purchase, often at an interest rate higher than current mortgage rates and with a balloon payment due after at least 5 years. Remember, you are now the lender, and if the buyer defaults on the payments, the owner has a right to foreclose on the property and take back the property and keep all payments made by the buyer. Owner financing is a popular option for borrowers because it can make it easier to finance the purchase of a home. Sellers might opt for owner financing to expedite the closing process and collect interest rather than taking a lump sum payment. 8. Bankruptcy, mortgage and tax foreclosure. If a foreclosure sale is scheduled to occur in the next day or so, the best way to stop the sale immediately is by filing for bankruptcy. This will require the assistance of legal consulting and representation. Typically, this automatically will stop the foreclosure in its tracks. Once you file for bankruptcy, something called an automatic stay immediately goes into effect. The stay functions as an injunction prohibiting the bank from foreclosing on your home or otherwise trying to collect its debt. So, any foreclosure activity must be halted. While this option does not fully guarantee that your house will be saved from foreclosure, it can, at the very least, delay the foreclosure. When you file for bankruptcy, typically Chapter 7 or 13, the court will put an automatic stay on your estate, everything you own. This means that, if a lender is pursuing foreclosure, they will be ordered to stop, giving you time to get on top of your finances. This can be a little tricky, however, as filing for Chapter 7 bankruptcy could very well guarantee that your house gets sold by your bankruptcy trustee. Filing for Chapter 13 bankruptcy typically means that you get to work out a repayment plan, so you will still be paying off your house. The bank may file a motion for relief from the stay. The bank will probably attempt to have the stay lifted by filing a motion seeking permission from the court to continue with the foreclosure. Even if the bankruptcy court grants this motion and allows the foreclosure to proceed, the foreclosure will be delayed at least a month or two. This should provide you with time to explore alternatives to foreclosure with your bank. With all these different ways to stall or stop a homeowner from being subject to foreclosure, hopefully, you can find refuge in a few of them. Jay the Realtor is happy to assist you in working through the process and working with your lender or the county tax office authority to perform the preliminary calculations. Jay can also begin the sales process today, even if the primary objective is to seek approval for a loan modification or forbearance agreement with the lender. Are you willing to do what is needed to eliminate the chance of defaulting on your property? Yes, you the homeowner, can do it. Take control with the help of Jay the Realtor with his network of brokers, lenders, attorneys, state resources, and private investors.